Welcome to this first video of what is trading and how you can start from zero. So I get this question a lot. I've been trading for 15 years and people want to know, how do I make money trading? How much money can I make? How much do I need to put in? How many trades do I need to do? When do I need to buy? Which broker do I need to use? So I'm going to explain trading in the simplest way possible for people who are starting completely from scratch. No confusing jargon, no hype, the truth, the reality. By the end of this video, you'll understand what trading is, how it works, and how you can begin your journey, even if you have zero experience. So I'm going to put out a series of videos, and this will be the first one, starting with what is trading. So trading means buying and selling something. Usually it's, in this case, a financial instrument. What is a financial instrument? It's just something, a financial something that moves with the goal of making a profit. So I'm going to jump into a screen shortly. I'm going to, for example, if you buy a shoe at $100 at the low price and sell it at a higher price of $102, the difference is your profit. So that $2 is your profit that you put in your pocket. So if you buy a currency at a low price and sell it at a higher price, that's the same. So a currency means, usually when people talk about Forex or a currency, you have a certain currency in your bank account. For example, like dollars. If you want to buy pounds, you need to exchange those dollars for pounds. So at a certain price. So you want to buy that pounds. Then after a couple of days, you sell your pounds, exchanged back to your dollars. So that is a exchange rate of the US dollar to the pound. Okay, so usually you can also make a profit on that, or you can make a loss depending on where the pound moved in those days. So you can obviously, there's a thing called short selling. So you can do the opposite. You can sell high first and then buy it back at a cheaper price later stage. So trading is not about gambling, it's about predicting price movements and managing risk. Think of it like flipping a product. Buy low, sell high. That's the foundation. So I'm going to quickly jump into a screen and talk about short selling, because some people ask me, what is short selling? So if you don't want to know the complications and how does it work, you can skip forward and move on to the next thing, because it's actually as simple as it is. You can sell high first and then buy back. So it's just the opposite of buy low, sell high. Okay, but let's jump into it. I'm going to explain to you how it works. So you'll typically get two traders. Trader 1, that's trader 1. This will be trader 2. Okay, so this is this guy and this guy. Okay, two traders. Trader 1 owns the pair of shoes that he bought 5 years ago, for example. So he is borrowing it to, lending it to trader 2. Okay, so this guy, trader 2, doesn't own anything. He only borrows it from trader 1. Okay. He takes those shoes to the market. So let's say this is the market where he goes and sells it at a price of $100. Okay, I'm gonna write it here. $102. Okay, so he waits a couple of days. So he doesn't have the shoes anymore. So he needs to give back those shoes to trader 1. Okay, So he goes to the market again. He buys exactly the same shoes for $100. Okay, so the value dropped during that week. He buys those shoes back for $100. The price went down in that week. So just a summary here. So it's 102 minus that 100, and that equates to $2 profit. Okay, so he needs to give back those shoes to trader 1 that he borrowed. So he is left over with $2 of profit. So going back to it, just to summarize, he basically just borrowed shoes from trader 1, sold it in the market, waited a week, bought it back for $100, and he made $2. So he's only left with $2 profit. And that is short selling in short. So just to be clear on that, this is all happening automatically in the market. So you don't have to find a trader that has some of those shoes, or you don't have to search for anything. It's already available on your platform, so it's quite easy to happen. So don't overthink it. That's basically it. All right, so jumping back into those things. So what can you trade? There are many different markets you can trade here. The most popular ones are stocks, shares of companies like Apple, Google, Tesla. So the company is putting out shares for the public out there. So they are waiting for the public to give them some money so that they can take that money to build a phone, a car, or whatever they want to build. So they basically raising money from the public. So you can decide if you want to own a share of that company. So then we have Forex, foreign exchange market. Like I explained earlier, you can exchange your currency for a different currency. So some people own a few currencies. So then we have commodities like gold, silver, oil. Then we have digital currencies like crypto, Bitcoin, Ethereum. And then we have futures. So futures are contracts that allow you to trade the future price of various things, including currencies, stock, indices, or commodities. So you're not owning the physical thing. You're just owning a contract so you can buy and sell contracts, basically. So that's why it's just called an instrument or a something. So again, that is all happening automatically in your platform, on your broker, or wherever you trade. It's happening automatically. So you don't have to search or fill out a physical contract paper to trade. So it's all happening digitally, instantly, that all the information is collected that's necessary. So usually, or most of the time, so each market has its own style, hours, risk, but you only need to focus on one when starting out. So you don't have to trade everything. If you want to trade stocks, focus on stocks or a specific company you want to trade, like Tesla or Apple, and you want to trade that specific thing. It's just way much easier to focus on one thing. So that's how I started as well. I played around with a lot of things. I started first couple of months, I played around with a lot of things, and I ended up trading only one instrument or one. For example, if you want to trade gold, you will only trade gold and focus on that thing to understand it. Like I said, when the trading style, the hours, the risk, you need to know. Okay. So prices in the market move based on one thing: supply and demand. Like explained earlier about the shoes, I usually try to understand the market with a physical thing. It's much easier to understand it. If more people are buying something, the price goes up. If more people are selling, the price goes down. Think of it like a limited edition sneaker drop. Exactly. If 100 people want the shoe, but only 10 pairs are available, the resale price shoots up. The same idea applies in the financial markets, whether it's currencies or commodities. And what causes this supply and demand? News, emotions, big institutions, interest rates all play a role. You'll learn more about this later in the series, okay? You might be wondering who actually trade these markets. Big institutions like banks, hedge funds move billions of dollars. So we've got retail traders, that's you and me, trade small amounts from laptops or phones or PCs. And then we've got high frequency bots, HFT algorithms, trade thousands of times per second. So high frequency bots, that's very competitive. The big institutions, very competitive industry. So we are like the retail traders, so we don't focus on that seconds. We are more in that space of normal trading, like a typical over the internet. And yes, even though with small fish, the internet and modern platforms have made it possible for anyone to learn and compete with the right knowledge. So another question: trading versus investing. Let's quickly clear up the difference between those two. So investing is long-term, months or years. You buy and hold something expecting it to grow in value over time, a long time. All right, that's a typical Warren Buffett style investing. Trading is short-term. It could be days, it could be hours, even minutes, seconds. You're taking advantage of smaller price movements more frequently. So those transactions you can do multiple times in a day, for example. Both can be profitable, but trading is more active. It requires faster decision making, a bit more screen time, and very strong risk management. This series focuses on trading specifically, particularly the kind that even actually eventually leads you to a funded account with a prop firm, but you can also lose money. All right. So what you need to get started? Honestly, not much. Nowadays, you can trade from a laptop or desktop computer, nothing fancy. Then we got a stable internet connection. Depending on how your time frame or how quickly you want to do transactions, I think obviously the shorter, less time you need to make those decisions. You need a quick internet or quick stable connection, more screens probably. If you're investing, probably like you can even do that on a phone. So you need a free trading platform like a MetaTrader 4 or 5, and have TradingView or NinjaTrader. I'm gonna quickly show you TradingView. Let's TradingView. I'm gonna show you here. TradingView. Go to tradingview.com. You'll see that's have a download your platform, sign up and download your platform here. You can find a lot of things. Okay, I'll explain on a later stage. I'm going to go more into detail. Then you need a broker to open a demo account, or you can have this TradingView, for example, also to have your demo account. And that's it. You can start practicing a simulated environment using fake money. This is called a demo account, and it's where you learn without risking actual money. Okay, what's next in the series? This video is just the starting point. In the next video, I'll show you how traders actually make money, and more importantly, how they lose money if they don't manage risk correctly. You learn what a pip is, what is a tick, what is a point, what is leverage, and the most common mistakes new traders make. Right, so the next step in journeying to becoming a prop firm trader. So hopefully we can do that. Thanks for watching. If this made sense to you, even just a little, then yeah, leave it in the comments below. Ask me some questions. I'll try, and even after this series, and if there's some more questions, I'll address those in separate videos. And I'll see you in the next one. Cheers.